How's it going, everybody? It's Stas here, and in this video, we're going to be talking about and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade right now in the end of December, heading into this new year here in January 2020. And like you guys read in the title, we're also going to be breaking down the natural gas futures. I'm going to be giving you all my opinion on UGAS and DGAS, and I also want to break down the E-mini S&P futures, the Nasdaq futures, as well as the Dow Jones futures to get a better idea of where this market could be headed here over these next couple of days of trading. And today is Christmas, and I originally was not going to film a video, but after getting home from some family, I'm like, what am I going to do now? Honestly, am I going to surf the web? Am I going to watch some Netflix? No, I'm going to film this video, get some thoughts out to you guys, and why not, right? So I figured, why not make the video? Here I am. Here's the video you are watching, and that's what we're going to be talking about in this video. So if any time in this video you enjoy it, feel free to go down below and hit that like button for me. Consider subscribing if you want to see further content from me, and if you want to be further connected with the Strive Smart community, the Discord link is down below, as well as that juicy Facebook group in the description box. So guys, let's talk about this. Let's talk about what is going on. And by the way, Merry Christmas, guys. I hope you all had a fantastic day. Before we even get into the video, hope you all had a fantastic day with your friends, with your family. If you celebrate, I sure did. If you want to see some food that I ate, I don't know if you guys even care, but if you guys want to see what I did throughout the day, go check out my Instagram while you're at it at Stas Surfest. That is also linked down below. So let's talk about the E-mini S&P 500 futures. Let's kick off the video here. You can see it's up $3, up 0.09% ever since the futures market opened at 6 p.m. Eastern Standard Time, which was an hour and 5 minutes before filming this video. So an hour and 5 minutes ago. And that's really not too crazy of a move here in terms of, a gap up. We've seen crazier gap ups. We've seen even crazier gap downs, right? And this is just in line, in my opinion, with the price action over the past couple of days. It is sort of breaking up here. There is potential, as you guys can see, for further upside, but until that happens, this price action is, it's looking like straight up consolidation, and ever since the 20th of December, we can see it's been straight up consolidation at around 32.20 to around 32.30. So the fact that we didn't break below that level of support, that's a good sign that this uptrend is holding. If we go back on this hourly chart, right, that's a good sign the uptrend is holding, the fact that we're gapping up slowly. And again, if we do break up and into, the 32.40s, that's obviously going to be an all-time high and the continuation of the uptrend here for the ES. And we'll take a look and see what are these futures doing in the morning. If they're continuing to gap up, hey, we may expect an all-time high tomorrow, the next trading day, who knows, right? But as of now, this is good for the bulls. We're gapping up, we're pushing up. That is positive. If we look over here to the Nasdaq, this is currently up 5 points, up 0.06%, and it's also pushing up. With this little move up here, it's a good sign that we're potentially holding this 50 SMA on the hourly chart, continuing the uptrend. And if we go on this 5-day, 5-minute chart, you guys can see this is setting up for a breakout, especially if we break out, obviously, above 87.30, 87.40, which happens to be the previous all-time high. So if we break above that level, do something like this, we would obviously expect some all-time highs in the Nasdaq and maybe continuous all-time highs for a couple of days. Who knows, right? Let me know in the comments what you guys think on that. And that's pretty much the price action for the Nasdaq. Nothing crazy. If we go over here to the Dow Jones, this one's up 22 points, and you guys can see the clear gap up in terms of these candlesticks. That's a very good sign, in my opinion, especially since we broke the 50 SMA. This is very good for the bulls, right? Now we're looking to potentially test 28.525, which is a resistance roughly right here. And if we break that level, we may be testing that 180 SMA on this 5-day, 5-minute chart. And then if we break that, we may be going up to 28.588, which is that all-time high. And of course, we might even break that here in the next couple of days if these markets continue to rally. So overall, that's what the futures are looking like, guys. Nothing crazy, but the way they're gapping up now, this is looking good for the bulls on many different time frames throughout the S&P, the Dow, and the Nasdaq. So again, drop a comment down below. Let me know your thoughts on that. Now, let's talk about natural gas very quickly and talk about what you guys saw in the title, which is a natural gas futures pop, because that's exactly what we're seeing now, and it's continuing as I'm speaking, right? You can see we hit a low at around 216. This was actually yesterday on Christmas Eve, and then ever since then on this 1-day, 1-minute chart, you guys can see a clear uptrend breakout, right? We're no longer treating these moving averages as resistances. We're actually breaking out of them, holding them as supports, making higher lows, making higher highs. That's a very good sign here on the daily chart. Moving over to the 5-day, 5-minute chart, we're also breaking out of resistances, being those moving averages, both the 180 and the 50 SMA. We're making higher highs, higher lows, and we're about to see a bullish cross when the 50 SMA, if the 50 SMA crosses above this 180 SMA, and you guys can see it's about to cross literally right now as we're speaking. So that's a good bullish sign here for the natural gas futures. And what I'm thinking here, guys, is this could be a short-term play for you guys. And let me explain. We've talked about this exact pattern multiple times over the past couple of weeks. And hear me out. Every time natural gas seems to take a big dump, to take a big sell-off, to continue the downtrend, every time it does that, it sees a bounce back. It sees a breather. It sees some sort of recovery where we could profit on you guys, which goes up whenever natural gas goes up. And take a look at the chart. The proof is in the pudding, right? Every time over these past couple of weeks, we hit a lower low, we've recovered, right? And we've recovered back up to that 50 SMA being this green line that you guys do see here, right? Every time we've gotten extremely oversold, RSI has been really, really oversold, right? You can see this time oversold RSI, we pop back up to the 50 SMA. This time oversold RSI, we popped right back up to that 50 SMA, and now we got the oversold RSI again. The RSI is starting to reverse, and the futures are starting to reverse. This could be the time where, another time rather, that we could fill up to that 50 SMA, giving natural gas, in my opinion, potential from 220 up to around 228 to 230. And from there, who knows? We might not get rejected by that 50 SMA again. We may actually fill the gap up to 240, which could be up to that 180 SMA, giving natural gas maybe 9 to 10% potential for profit. So those are some things going through my head right now, guys, and you know, if you've been following this channel for the past couple of weeks, you know that I called out both of these moves. And when I see history repeating itself, it doesn't mean it's going to happen again. All I'm doing is waiting to see if it could happen again. And then if it happens again, that's where I'll take advantage of the opportunity. So I think it's worth watching here, especially again since we saw a couple of days of selling off. We saw a big gap down, and it is oversold and looking for the recovery. So those are some thoughts there on natural gas. And from a fundamental basis, guys, like I've been mentioning, the reason why natural gas's price is so depressed, or suppressed rather, it's so beaten down, it's because we have a ton of production of natural gas right now. We have a lot of storage. We have a lot of inventory compared to last year. A lot more compared to last year, about 600 BCF more compared to last year, if we're being exact here. And the weather is warmer, the weather is milder, there's not as much demand, right? So there's not as much demand, and there's a lot of production, and that's what's squeezing these prices down, because if the weather was freezing, we had a lot of demand and low production, that is a formula for a pop-up, right? For a pop-up, and that's exactly what we saw last year. And again, this year, it's the opposite of that, which is why we're seeing this dump in natural gas. And will this change over the next couple of months? I have no idea. Really, nobody has any idea. But a lot of people are still sticking to their guns, thinking that natural gas will eventually rally up to $3. And I do think it's going to rally eventually, maybe to 240, like I mentioned, maybe 250. Maybe if it goes to 250, 260, that's going to be a massive move. I'm not sure if it gets to $3 this year, guys. Honestly, I'm not too sure about that, but I wouldn't be surprised if we did see some sort of rally back into the 240s, 250s, and only time will tell at this point, guys. Don't take my word for it. Do your own research. Always do your own research and your own due diligence, and buy based on your opinion and nobody else's. And if we go over here to UGAZ, you guys can see it went through the reverse split. We all know that at this point. The partials, if you guys didn't have shares divisible by 10, those partials will be paid to you in cash by January 3rd. I believe that is what Credit Suisse came out and said. And guys, just keep an eye on natural gas. The price action here on UGAZ is a bit funky because it went through the reverse split, but all you guys have to look at is natural gas. And if we do slowly start to see that gap fill that I talked about, UGAZ is going to go up. And this thing continues to fly, guys. It's up 4 cents right now. Take a look at how bullish this looks. And yeah, that's pretty much it, right? I'm watching for that potential fill up there for you guys. Some other ones that I mentioned in yesterday's video, but I figured I'm going to talk about them in this video again because I'm truly watching these stocks. Some of these I didn't talk about in yesterday's video, but I did talk about this one, I believe, is Boeing, ticker symbol BA. And there's been a lot of rough news around Boeing. They just fired their CEO. All of the craziness surrounding the 737 MAX, that's led the stock to get clobbered here over the past couple of months. If we look on this yearly chart, this stock was $446 here, guys. About 8-9 months ago, which is crazy. Now we're over $100 less per share from that point, which is around a 30% trim. Maybe not 30%, more like 25% trim in the stock, which is insane. And as a swing trader, what does that do? That opens up potential for profit. So I'm looking at this as a swing trade, but more, in terms of a pattern, we're looking at this more as a horizontal pattern, which is from around $330 to around $375. And you guys can see based on this yearly chart, we've held that general 330, 335 area once, twice, 3, 4 times in the past as a support. And it seems like now, after the sell-off, the CEO getting fired, it seems like we are holding that level yet again. But that does not mean that I'm jumping the gun here on Boeing. I need to see an hourly break, a 180 SMA break on this hourly chart. We failed to do that this past trading day. So I think, if we start to get into the 340s, maybe 350s, that's where I'd look to build a position. And again, up to 370, that's where I'm looking to exit this position. And there's a lot more potential from there. And if we end up breaking 370, that could be another entry point, maybe back up to around 390 to $400 per share. The next one that I want to talk about is Fedex here, ticker symbol FDX, very similar to Boeing. This is one of those stocks that it's been getting crushed here over the past year. Let's be honest, guys, from about $200 down to about $150. Not as bad as Boeing, but that is around a 20 to a 25% haircut in the stock. And you can see this is similar to Boeing in the sense that it's kind of in the horizontal pattern here between 150 to around 170. And the fact that we haven't really closed above this general area of around 152 to be more precise in terms of that support, that is why I have not quite yet gotten into Fedex. I believe, once we break into the 155s, ideally into the 160s in my opinion, this could be a fantastic swing of about 5-6% back up to 170, and who knows, if we end up breaking above that level, there could be even more potential up to around 175, which could be up around 8 to 10% potential for profit. And this really tanked because of an earnings report. I don't remember the numbers right off the top of my head, to be honest with you guys, but they did report poor earnings. Obviously, the stock did not react well to their earnings, and their stock went from that 170 resistance that we were talking about all the way down to about 147, giving it around a 12% haircut. And since then, we've been consolidating and reversing, and this is a good sign in the short term, in my opinion. But again, I'd need to see a break into at least 155 before even considering a position. So another one that I'm watching here is Uber. I'm really loving Uber for the potential breakout here. I feel like all the bad news is behind Uber. You know, the lockup, they had a couple earnings reports that were bad. They're burning through cash, and honestly, they'll continue burning through cash here in the short term at least. I think one analyst said they might be profitable in 2020 or 2021. Uber actually said that, to be honest with you guys. And until then, they're going to be burning more cash. But honestly, guys, the lockup expired. The stock's down 50%. I think, you know, even if there isn't a crap ton of upside here, maybe over the next 1, 2, 3 years, I'm talking about in the next couple of weeks, I think there is some potential, right? From around $30 up to $33, like we've been talking about in these videos. I'm already in actually at around $30 average cost. I think there's a lot of potential there from 31 to 33 of about 8 to 9 to 10%. And if we honestly break above that level, there's going to be even more from about 33 up to around $44, that being around a 20% profit. But let's not get ahead of ourselves yet, guys. Let's first break above 31, then we'll worry about 33, then we'll worry about, let's say, maybe $38, $35, and so forth, right? But either way, Uber is just one of those that there's just been so much bad news around it. Negative, right? You know, the lockup, all that stuff, it's behind us at this point. Sure, a lot of news that could be negative might pop up here in the short term. That could rocket up, but in the next couple of months, weeks, I do think that there's a lot of potential here for Uber. We talked about this one, I believe, in yesterday's video as well. Facebook, it's still on my watch list here. Obviously, nothing has really changed since yesterday, but I figured why not make another video, talk about it to let you guys know what's going over in, or, you know, through my head right now. So for Facebook, 205 is the ideal entry point. 205, 206, that's where I'm looking to enter. I'm loving this dip from about 208 down to where we are right now, because if we get that confirmation that we're holding 205, 206, and then we start to rally back up, let's say tomorrow, maybe the next session, that could be the perfect dip buy we want. Then we could end up riding it to about 210, maybe 216, and grabbing that profit of around 5 to 6%. And if you guys know, or don't know rather, Facebook's all-time high is around $220 per share, so there is a lot of potential here, in my opinion, from 205 to 218, because Facebook is arguably the most undervalued tech stock out there, even though it's not undervalued, but it's not overvalued compared to some of these other ones like Apple, which I think is getting to overvalued territory. You know, Microsoft is arguably overvalued. Amazon, maybe not as overvalued, but you guys get the drift here, right? So that's Facebook. Disney's another one I'm watching, really just for a potential bounce play here on the 4-hour chart. On top of that, what is it? That 180 SMA. If we pull up that 4-hour, you'll be able to see it. Yup, on the 180 SMA and the general 144, 145 area, that is a strong level of support from this point in the middle of November, from this point in the middle of December, and obviously right now we're holding it, based on the 23rd of December's price action. So I'd love to see, do we break up? Do we break that 50 SMA and make our climb back up to 153? That's where I'm looking to profit here on Disney. So the last one I do want to talk about today, a little bit of a shorter video today, by the way, guys. Again, just getting some small thoughts out there to you all, is Netflix, ticker symbol NFLX. And Netflix arguably is not a good buy right now, honestly, because it's overbought. We're at a resistance, but it might be a good buy if we pull back down either to 320 or if we straight up just break out of this 340 level and start to truck up and make our climb to the 380s, because that's the next channel that we are seeing here on Netflix. And from 340 up to 380, guys, that's a big move. It is a big move. It's around 11% here for ticker symbol NFLX. And another thing worth watching is their earnings that are coming up here in less than a month. So if you're looking to swing Netflix here for a month, 2, 3, 4 months, whatever it may be, that is something to keep an eye out for, because let's say they report negative earnings, this stock could definitely take a huge haircut, huge dump. But with Netflix, like a lot of these other stocks, this has been clobbered as well, really due to Disney, in my opinion. Disney Plus coming out, that's been putting a bunch of pressure on Netflix. So if they, on the flip side, have a good earnings report, I think this thing could explode out of the water, because it's honestly due, in my opinion, for a nice couple month rally, because it's just been slaughtered, guys. Let's be honest. From 423 down to about 223. You guys remember that sell-off? That was pretty crazy. We went up to 375 again, sold off all the way to 250. So it's just been a lot of selling. And maybe Netflix does see, some longer-term prosperity here over these next couple of months. And that's kind of what I'm waiting for to see before entering a potential swing trade. So overall, guys, that is it for this video. If you enjoyed it, feel free to go down below, hit that like button, and consider subscribing if you want to see further content from me. And if you want 2 free stocks from Webull, I actually have an affiliate link down below where if you deposit $100 using my affiliate link, you get 2 free stocks valued up to $1,400 for literally just putting in $100, which is pretty crazy. So that's linked down below. Again, Merry Christmas to everybody out there. Hope you all had a fantastic day. I sure did. I just hope you all did very well, or had a very nice time with your family and friends. I'll catch you all in the next video. Thanks again, as always, for all the support, for watching. It just means a lot to me. I appreciate you guys. Peace out.